Hey, what is up guys, and welcome back to my channel. And for today's video I'm going to talk about Fastly, which is a company that is listed in the US stock market. We're going to understand what this company does, what are their services, what are their competitors, and why this company tanked 2 weeks ago. So before we get into that content, remember, if you like the video, please hit the like button and subscribe to my channel. And if you have comments about this video, please leave those comments in the comment section below. So first of all, let's understand what this company does. Well, basically this company is a website booster. It makes websites faster and more secure. So to better understand what this means is, for instance, let's suppose that I have a website and this website is stored in servers located in Toronto, Canada. So for instance, people that is trying to get access to my website from Montreal, the information of my website is going to be displayed on their screen really fast. And what happened with people that is trying to get access from Vancouver? Well, in this case, the speed at which the information is displayed on their screen is going to be a bit less fast, but we're talking about milliseconds, actually not even 1 second. So basically the user experience is going to be the same. But what happened with people that is trying to get access from Europe or Japan, for example? Their physical distance to the servers in Toronto, Canada are actually bigger. So in that case, the speed at which the information is displayed on their screens actually is going to be lower in that case. So this is where Fastly's services comes in, because Fastly has servers all around the world. So if I get Fastly's services, my website is going to be let's say stored in their servers. So people that is trying to get access from Europe, they are going to connect to the servers that are located in Europe, and then the speed at which the information of my website is displayed on their screen is going to be faster than if they are trying to get access to the server that is located in Toronto, Canada. So this is overall what Fastly does. For me, it is a good idea, it is a good service, and I know a lot of companies are using their services. So what happened with the price of the stock? Well, overall, in October 15th, the company had a drop of approximately 30% in the price of the stock. And let's start to understand why this happened. Well, basically, the analysts were expecting a revenue for the third quarter of the year between 73 and 75 million dollars. But the company revealed, Fastly, that they were not going to meet those expectations. Instead, the revenue is going to be between 71 and 72 million dollars. So investors didn't like this, and that's why the company, or the price of the stock, tanked in that day, losing approximately 30% of the value of the stock. But why this happened? So why the revenue is going to be less than expected? Well, the reason why, or the main reason why, is because TikTok, which is the biggest client Fastly has right now, is not using their services as much as they were using it before. And mainly the reason is because we all know that the US actually is banning TikTok application, and also what for me is more important is that India, the country, actually is banned TikTok services as well. So India and US are not using TikTok application anymore. And for instance, a lot of people is talking about the United States and stuff like that, but for me it's more important India, because as we can see here, it represents the biggest market for TikTok. We're talking about approximately 30% of market share. So if TikTok is not using, or these people are not using TikTok anymore, well, obviously TikTok is not going to be using Fastly's services, and therefore the revenue of the company is going to be affected. So you can say that Fastly doesn't have anything to do with TikTok's issues in the US and India, and I totally agree with you. But what is more important for me is the fact that Fastly also announced that there are more clients that are not using their services as they were using it before. And the company didn't reveal who these customers are and the reason why they lowered the usage of Fastly's services. That is something that I actually don't like about all this. So we don't know what customers and the reason why, and Fastly actually hasn't said anything about it, and we don't know if they are going to reveal that information in the future. We can wait until October 28th, which is the date on which they are going to disclose the real revenue of the company for the third quarter, and maybe they are going to talk about more about this whole situation. But so far, for me, that is the most important thing to talk about in this video. So another thing to talk about is the fact that ARK Invest, which is a company that has an ETF called ARKW ETF, which is a good ETF actually, they are actually buying a lot of shares from Fastly. They are investing approximately $27 million in Fastly's shares. So they are taking advantage of the fact that the price of the stock is 30% cheaper. So why a company like this is buying shares of Fastly if the company is not doing good business as well? In that case, we have to search for more information to understand why this company is buying more shares of this company. Actually, it's the first time ever this company ARK Invest is purchasing Fastly's shares. So like I said, we have to understand why, because any company is going to be buying shares of another company that actually is not doing good businesses. So now let's go through the fundamentals of the company to see if how this company is been behaving for the last couple of years and what analysts think about the company in general. So we go to our favorite page, which is Yahoo Finance. Ticker symbol for Fastly would be FSLY, and we have it here right now. So we go straight to financials, we go to the income statement. We have information from 2017 to the actually 2019, the entire years, and we go straight to total revenue. So we can say that the revenue of the company is being increasing over time, which is something very important and actually something very good as well. So, but also we have to notice that the company doesn't have any profit so far. So it would be better for any company, to these negative numbers to be positive. So I would expect any company that is in the negative numbers to reach zero as soon as possible, and from there to be incrementing in revenue. But this is not the case for Fastly. We can see that from 2018 to 2019, the contrary actually happened. So if, like I said, if we are interested in investing in this company, we can Google this information to understand what actually happened. So let's go now to the balance sheet of the company, and I like to go straight to the total cash of the company. So from 2017 to 2019, we can appreciate that the cash this company holds is being increasing, which is something very positive about the company. For instance, if we take a look at the total current liabilities, they can pay off the current liabilities if they want, but in this case they haven't done that, and actually they can pay all the liabilities of the company at once, but if they ever want to do that. So it is very important to understand that, because if let's say that for one entire year the company doesn't have any revenue, well, they can still pay off their debt without any problem. And the total stockholders' equity is $257,000. So let's go to the cash flow of the company, and we can see, since this company has no profit, then it has no free cash flow either. So again, it would be better for a company to go from negative numbers to 0, and from there to be incrementing over time. But in this case, the same happened from 2018 to 2019, and like I said, you can Google this to know why this happened. It could be because they invested in new equipment, new servers. I don't know, it could be either positive thing or negative thing. So let's go now to analysis and see what analysts think about the company. So in earnings estimate, out of in average between 11 to 12 analysts, they estimate that for this quarter, the third quarter, the average estimate was going to be 0, and for last year's was minus 0.09. So you see here what we expect from a company is going from negative numbers to 0, and from there just be incrementing over time. And actually this is what they expected in the third quarter. For the last quarter of the year, they expect 0 earnings as well. And I actually don't understand why, because it would be better to know or to see in an increment between one quarter and the other, but in this case it's not what is happening. In total for the year 2020, the average estimate is going to be minus 0.04 cents per share. We can see here that last year's was minus 0.52, so we can see a positive thing in this case. And for the next year, it's going to be, according to them, 0.03 cents per share. So we can see here going from negative to almost 0, and from there going to positive numbers, which is the case for this company. We can, and the total revenue, according to these estimates for the third quarter, was expected to be 73 millions, like I said at the beginning of the video, but the company revealed that this is not going to be the case. For the last quarter of the year, they expect, or the estimate is going to be 84 million. I think they are not going to meet this mark again because of the same situation with TikTok and all that. And for the year, the whole year, they expect to be $295 million. For last year's, it was $200 million. So basically we see an increment in the revenue of the company, which is something very good. And for next year's, it's going to be, according to them, $392 million, which is again something good because they expect the revenue of the company to be incrementing over time, and it's something that I actually would look for in a company as well. So overall, I can say that right now I would add this company to my watch list, because from October 15, which is the day the company or the price of the stock tanked, up to date, the company or the value of the stock has lost another $10 more. So maybe the price of the stock is going to continue falling. I still don't know, but like I said, I'm going to add it to my watch list. And if the price of the stock starts incrementing, then it's going to be a good signal that maybe the trend is changing in that case. So again, I think that you will agree with me in the fact that the issue with TikTok doesn't have anything to do with Fastly, and that's why it's something that I'm not worried about. But the fact that they didn't reveal why another clients were lowering the usage of Fastly services, and the reason why is something that I still don't like, and that's why I'm not investing in the company right now. Like I said, I'm going to see what is the price of the stock from here until let's say 1 month in the future, see how this company behaves, how the price of the stock behaves. We have to wait until October 28th to see what are the final results of the revenue for the third quarter of the year, and from there we're going to see how the price behaves. So this is the information that I have ready for all of you. Remember, if you like the video, hit the like button and subscribe to my channel. You're going to help me a lot by doing that, and also if you have comments, leave that info in the comment section below. Thank you for watching and have a good one.